Hi, I'm Vivek Kartha, and welcome to Deconstructed. Every episode, we're discussing the future of the world's largest asset class, real estate, through the eyes of the people who live and breathe it. Thank you for joining us, and let's get started. Today's episode is brought to you by WorkSpace. WorkSpace has built a better way to manage real estate without all the clicks. With a suite of modern, intuitive products for commercial real estate operators, WorkSpace reduces the friction between assets, data, and people, allowing CRE professionals to streamline all their daily operations across property management, asset management, and beyond. Learn more at www.goworkspace.com.
Hi, everyone. We're here with Dennis Grzeskowiak, a principal and co-founder at Bellwether Asset Management. Dennis, thanks for joining us.
Thanks for having me. Appreciate it.
Bellwether's a pretty cool thing. Inc. 5000, 2 years in a row. It's a different kind of platform out there in the space. Can you just give the listeners a little bit of an idea of what you and the team have built and what you're building?
We started Bellwether in 2013 with 3 people, independently owned company, and we were a unique startup in that basically from day zero, we had a long-term contract with Oaktree Capital to help them build an asset management platform that really answered 3 questions. What do they own? How's it performing? How do we think it's going to perform? And as a result of those 3 questions, we've built processes, procedures, deliverables, and have grown from 3 to 73 and soon to be over 80 here this summer. So it's something that's been a really fun, adventure, building something from scratch, finding the highest and best use of asset management tools, and working with some really great people along the way.
Tell maybe a little bit more about why it sounds like Oaktree is your first customer, but any customer needs Bellwether's services.
Sure. It really comes down to asset management as a whole. I've been in asset management forever. We always get the questions from folks like, should I go into acquisitions or asset management? And I find that when there's pressure, when there's issues in the marketplace, having someone that has been able to see what the business plan was, find a way to proactively address any concerns that are emerging in the market, and then come up with a plan to go forward and get things best on track is a key component of asset management. And at Bellwether, we're very focused on giving our clients a proactive set of asset management tools, insight into their portfolios, and a scalable platform so that whether they are a new fund that is just starting out or a institutional client like Oaktree or Rockwood, we're able to give them the tools they need to manage their portfolio and execute their investment objectives.
Not to make it too controversial, but it sounds like in the industry, other industries, they call those managed service providers, people that have expertise and do things better than what we can do internally. Is that because more customers out there, or the financial customers out there, funds, just don't have the ability to build that skill set internally, or it's too hard, or it's too variable?
I think it's a combination of things. I think, one, building any kind of process or infrastructure obviously takes a lot of time and an investment. And when you have something that you can start from square 2 versus square 0 and have something that's ready out of the box, makes things that much easier and to get up to speed. And I think what we try to do is work in collaboration with our clients to maximize what they do best. So if their business in a fund allocation model is to raise funds and to deploy that capital, we want to take on the work that allows them to maximize what they do best. So we'll take on the day-to-day oversight of investments, continuing to give them a feedback loop to make them better acquisitions folks so they have real-time data of what's going on in the markets that they're invested in, as well as giving them the tools to both from the most granular level at the asset all the way up to the fund level so that they can dictate fund level strategy all the way back down to that asset level strategy as well.
For someone that came from the traditional private equity background, I think that's right. We liked to raise money and spend money, and there was a lot in between that we weren't necessarily great at, or that wasn't our expertise. Do you see this model growing? I think you guys have been around for a little while. You're the innovators in the space. Copycats, other firms are doing something similar, or do you think, oh, others be the first and only of its kind?
No, we never say we're the first and only of our kind. I think it's an existing model even before we started. We're a little different in that we're independent. When you look at a Lone Star with Hudson Advisors, they own Hudson. If you look at Deutsche Bank with Hanover Street's embedded within Citus. And you do see this existing model in the marketplace. Our competitive advantage is that we can confidently go in to our clients and say, this is how we do things. This is how we've built our infrastructure, not how we could do it. Meaning we've had the experience and the exposure in both debt and equity investments of all property types in commercial real estate, as well as corporate advisory, that we've been able to execute on and continue to refine and evolve over these past 8 years now. And with that, I think we really have a competitive advantage over some of our even larger competitors in the space, because we've seen the most complex things and can boil it down to the simplest outputs.
Let's talk about pressure. You mentioned that when the industry faces pressure, people that have experience and they've seen a lot of things can be maybe better stewards of assets, and that's a little bit of where the expertise comes into play. The last year has been one of pressure. A lot of things unforeseen, a lot of things people didn't expect. From your perspective, maybe sharing some of the insights and the work you've done with your clients, how do you make sense of the last year? And then maybe help us carry that forward into the next couple of years.
Sure. Yeah, that's my big saying this past year has been pressure reveals cracks. It also reveals where you're strongest. And what I think we've seen from both existing clients as well as, frankly, new clients that we've picked up along the way here in 2020 and going into 2021, when there's market distress, people want to understand what's going on, how that's impacting their individual portfolio and their individual assets. And if you're trying to understand what that impact is after the distress has occurred, you're already too late. So I think there's been this past year has really put an emphasis on asset management, data management, and processes to really understand your portfolio and know what's happening from an operations perspective in the moment, not 6 months later when you're finally able to build a system. I think for us, 2020 was one of our busiest years as a company. We hired about 30 people, so that's really had explosive growth. And part of the engine for that growth was the opportunity we saw and the demand for our services in helping to get things back on track, have people able to wrap their arms around a portfolio in a ever-changing market, and then also execute on those business plans and expectations once we understood the situation of what was going on.
Do you think that changes the way your clients think about investing in those systems, those protections long-term, or is this just a short-term reaction and in 3 years we'll be back to where we were?
I hope it's long-term. I think it is. And it's funny, we were talking about this the other day. What we've seen more and more is there's more embracing of technology and systems and trying to find scalable solutions now than ever. I think it was both the impact of the pandemic as well as just the natural movement and evolution of the market and technology dovetailed at the right time. And so I think people, after going through the distress of this past year, I think people are more open to leveraging technology and leveraging systems to make them better investment managers, better acquisitions folks, better asset managers than they were ever before. And so I think that's here to stay. I think that there's still a lot of evolution that can happen, but it's definitely, I think, a trend that's long term.
Well, you've raised it a few times, this idea of technology. And so on the one hand, I think I would agree, and most people would, that the industry is more receptive to technology today than it was maybe ever, certainly in the last few years. But there's another side to that, which is technology still needs to be practical, solution oriented. Hear a lot of stories about technology looking for a problem, it's not a solution. There's all the prop tech sort of noise out there. How do you personally make sense of all that noise and what is worth taking a look at? And then maybe help articulate that same thought through the lens of your clients who are probably interested in technology, but interested is not quite the same as ready to invest or invest in a solution.
Like all things, I think there's a cost benefit analysis and it needs to be demonstrated. I think too, what we found is the more established processes and technology, the better, so that you're not in the beta test group and going through those growing pains of trying to establish a system. Everybody has the old adage of real estate as an industry is one of the last to adopt technology. And I don't think that's necessarily the case. I work a lot on the multifamily side. We've managed over 30,000 multifamily units across the U.S. and that as a group has been at the forefront of prop tech innovation and adaptation. Bringing it back to Bellwether, we don't view ourselves as a tech company per se. What we do is we find the best applications and technologies, and we try to be innovative in the process and how we use those applications, not necessarily trying to develop them on our own.
That makes sense. When you just look forward into the world and as Bellwether grows, and you think about the kind of technology that excites you going forward, not necessarily what you use today, but what you'd be looking for in the future, does anything come to mind? I wish this was out there, but it's not.
The biggest thing for me is it's not just how the technology is applied or how things are being used, but it's the output. Are things digestible? Do they look pretty? And what I think we've seen as we search for different forms of applications, we found a lot of software that works really well, but doesn't necessarily produce a digestible output. And we've also found things that are very nice, shiny objects, but don't have anything behind the curtain to really support. Finding something that combines everything is what we're constantly in the hunt for, whether that's continuing to try to piece that together through different applications on our own or finding new innovators in the tech space to establish that. And then I think the other part, if I had a magic wand, it would be getting everyone to adapt to whatever technology is used, because what we found is that you can have the best suite of tech, but if you have bad data going in, you're going to have bad data coming out. And if you don't have that user engagement, then it makes it that much harder for something to succeed.
I want to spend a brief minute talking a little bit about the future of real estate talent, commercial real estate talent. Bellwether hires and has a program, I know, of bringing in young analysts, so you're very exposed to that side of the industry. If you were giving advice to people starting off their career in real estate, what do you think the industry needs more of, and what general advice would you give them?
For us, we're really proud of our analyst program. It's a philosophy of ours when we first started Bellwethers. We wanted to grow from the bottom up, meaning we wanted to bring people in early in their careers, give them the opportunity to learn and grow in roles and responsibility at Bellwether, and help really kick off their careers on the right path. And so over the years, we've refined this to a pretty solid 2-year training program. And what we go and recruit from schools all over the country, we find that you have to embrace doing the little things to gain big responsibility. And I think that's my piece of advice to our analysts starting out, anybody starting their career out, is that so often people want to run their own deals and they want to be in the decision-making seat and they want to give direction, but without having a foundation of understanding how this investment, this deal relates to the market, how it's performing relative to how you thought it was going to perform, and where that general understanding based within data, you're shooting from the hip and oftentimes aren't going to have a informed decision or opinion on something. Having somebody that is willing to come in and understand from the bottom up how real estate works and be open to and receptive to training and instruction and how to think about asset management in real estate, that's where somebody's going to really succeed. That's my advice to everyone, is don't get too far over your skis and start running before you figure out how to walk.
That's great advice. Last one, a fun one on the way out. When's the next time you think you'll hop on a flight for a business meeting?
I don't know. It'll probably be sometime this summer, both shots, so fully vaccinated. It's still just a weird world that we live in now. Just going out to dinner still feels like something that's completely foreign and new. It's going to be the next step up. We've been busy on our due diligence and acquisitions assistance and working through some underwriting projects. So I'm going to need to get out there soon. It's not something that I have planned yet. It's just that it's a big next step for sure.
Yeah, I think that's right. Thank you, Dennis. Appreciate the time.
Thank you. Thanks.
That's it for today. Thank you for listening. And, as always, a very special thank you to our guests. We'll be back soon, so please subscribe to Deconstructed on Spotify or wherever you listen to your podcasts. More details can be found at www.goworkspace.com/podcast. Today's episode is brought to you by WorkSpace. WorkSpace has built a better way to manage real estate without all the clicks. With a suite of modern, intuitive products for commercial real estate operators, WorkSpace reduces the friction between assets, data, and people, allowing CRE professionals to streamline all their daily operations across property management, asset management, and beyond. Learn more at www.goworkspace.com.